Hello, everybody. Welcome. This is my Wiley Solution walkthrough, Accounting Tools for Business Decision Making, 8th edition, exercise 20-15. Textbook authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of yours truly, not the authors of the textbook or of Wiley. Okay, so before we thank that bus driver, let's go ahead and take a look at this, our particular question. So we've got 5 other divisions, and then we have the Percy division and total. Now, this is what can be very, very deceptive. Oh, the Percy division is losing $26,000. So it's got to be eliminated. But we have to be careful about it, because if we eliminated a division, guess what's going to happen? The sales are going to go, but those fixed costs are the variable costs, and sales will go, but the fixed costs will be staying. So here's what we're going to do. When we get a question like this, the way it's worded right now, we're going to rewrite this a little bit differently. So 5 other divisions. So we've got sales, cost of goods sold, variable, cost of goods sold, fixed, total cost of goods sold. Over here, we're going to have operating expenses, variable, operating expenses, fixed. And then we're going to have our net income. And I'm going to add in one thing over here, gross profit. And then we're going to have our total operating expenses, and then we're going to get to our net income. Okay. So I'm going to rewrite this. I'm going to show you why we're going to do that momentarily. So for my sales over here, the 5 other divisions, 1,664,200. I'm just going to assume that these cost of goods sold for the 5 other divisions were over here. So my gross profit is going to be 685,680 using the same amounts. Over here, operating expenses, this is 527,940, total operating expenses. So my net income is going to be 165,680 minus the 527,940, or this is going to be 157,740. All I am doing is I am just going through and reformatting how these income statements are looking, so that when we decide to eliminate the division, it'll make a little bit more sense. So here for Percy, okay, so this, what we call this, do not eliminate. Okay, for Percy, they had sales of 100,000. And now this is why we have to look at this carefully. In the Percy division, cost of goods sold is 61,000 variable and 15,000 fixed. So over here, my total cost of goods sold are 76,000. My gross profit is going to be sales minus my cost of goods sold are 24. For my operating expenses, these are going to be 30,000 variable. Okay, so my operating expenses variable are 30,000 variable, and then my fixed are 20,000. So my total operating expenses are 50. My net income, or my net loss, is going to be my gross profit minus the 50 over here. It's going to be at 26,000. So my total So 709,680, operating expenses variable. They have 577,940. So my gross profit, this, okay, I've got 131,740. So what I've done here is all I've done is I'm just kind of re-showing this in this format. Why am I doing this? Because right now, if I decide to go through and if we eliminate Percy, what happens to the numbers? Well, if I eliminate Percy, okay, the sales are going to go away. Also, the cost of goods sold variable are going to go away, because if we're not producing anything, the variable goes away. Over here, my operating expenses variable will also go away by, this basically goes to 0. So now as I look at this over here, my total net income, right? So again, when I look at this here, the only cost I'm running at a Percy now at a loss. Why is it at a loss? The loss is like it's 35,000. Why is it a loss? Because I can't get rid of fixed costs, right? I cannot get rid of the fixed. I can get rid of variable if I stop selling, but I cannot get rid of the fixed costs. So what we see happening is that my net income, no elimination, is going to be 131,740. My net income, eliminate, it's going to be over here at 122,740. So when you look at this over here, you're looking at it and saying, okay, well, if I eliminate it, I'm in a much better place. And that's why when you have someone say our profits will increase by 26 grand, that is far from it. And it's because you cannot get rid of fixed costs. So, but again, there's other things that could make this like a little bit different, but for this problem, like right over here, this is what you would be going through and looking at it. So I want to thank Wiley for allowing me to use their questions today. And I look forward to seeing you on the next video. If you have any other questions, please feel free to ask for them in the comments, and I will see you on the next video. Have a great day.